Well, hey, Southern Oregon, welcome back to the Real Estate Show. So glad you could join us today. We're going to be interviewing Guy Giles from Mutual Mortgage today. We had a big week in the money markets and also in housing. So Guy Giles from Mutual Mortgage will bring us up to speed on that, especially with the latest announcement from the Federal Reserve Bank. Here we go again, folks. In the meantime, let's take a quick look at our local markets. Let's start with Klamath County this week. Klamath County, this is single family residential only. The prices in Klamath County were down this week year over year by 6%. The average single family home in Klamath County now costing $297,313. Klamath County number of solds year over year are down 7%. We had 24 residential closings this week in Klamath, and the number of listings year over year in Klamath County are up 14%. Congratulations to 290 listings on the market right now. So let's do Josephine County next. Josephine County prices year over year are up 37%. Congratulations to you, Josephine County. The average home in Josephine County this week now costing $594,769. Number of solds in Josephine County this week year over year are down 38%. We had 16 closings, and the number of listings year over year in Josephine County are down 14%. We have 351 listings in Josephine County. Let's go to Jackson County. We've got prices down in Jackson County, 18%. The average price of a single family home in Jackson County this week now costing $470,230. The number of solds year over year in Jackson County are down 6%. There were 58 residential single family homes sold in Jackson County this week. And the number of listings year over year in Jackson County are down 24%. We now have 711 listings active in Jackson County this week. So lots and lots going on. The market's trying to rebound and absorb, at least in Southern Oregon, absorb all the changes that the Federal Reserve Bank has thrown at us. Plus, it's just kind of a weird world out there. So, but we still have more buyers than sellers. We should talk about that with Guy Giles and Mutual Mortgage as well when he comes on to be interviewed this week. So stay tuned for a quick word from our sponsors. Thank you, John L. Scott, Ashland, Medford, Guy Giles, Mutual Mortgage, and our local Rogue Valley Association of Realtors. We'll be right back. Well, top of the morning, Southern Oregon, and welcome back to the Real Estate Show. So happy to have Guy Giles stepping in today. We're going to talk a lot about what's going on with the financial worlds. Welcome back, Guy.
Hey, thanks. I was kind of thinking about all this fun smoke right now, and it's like we're in the most beautiful place in the world, and every time when the smoke finally lifts, it's like you just move to a new beautiful place. So I'm
well, and you can breathe.
Breathing's nice, but it's just one of those things that something to look forward to in the fall here, I guess, when it's
and maybe in just
cleared
a
up.
few days it'll blow out, right?
Yeah,
it doesn't last long. Speaking of not lasting long, the Federal Reserve Bank we thought would be done with all their ridiculous increases. Can you bring us up to speed, kind of what happened this week and some of the impact of that?
Well, the Fed minutes, kind of came out, and Jerome Powell spoke on Friday, and it's still a little bit of a wait and see. We were hoping they were all done with this, but the one stubborn thing has been the jobs. So right after the 1st of September, we will have some new jobs numbers, and I'm hoping that they're going to show, not to get really political. Job numbers keep getting revised. We're getting a lot of part-time jobs, not so many full-time jobs. And, that's been the one thing that this administration keeps pointing to is job numbers. Our job numbers are great. And on some respects, they've been all right, but in others, they keep revising them down about 25 from at least the BLS numbers. They keep revising them down about 25,000. So, every month. So they're not quite as strong. Hopefully that will be the catalyst to finally get the Fed to, maybe just pump the brakes a little bit more, not any more Fed, but there any more raises, but they are leaving the door open to it from what he said. It'll take a few days for everybody to really, break down the minutes and what he said, and everything will be a little bit volatile for the next few days. But the overall trend, I really believe, is a recession, which they're, putting us into. I don't think it's going to be super deep, but it'll happen pretty quick when they really realize and start admitting some of the stuff that's been going on. And I say that because, like, small business, that was another survey that came out this week.
Yeah.
25% of them are anticipating growing. And so that makes 75% that are not planning on hiring any more people or reducing their workforce. So, I mean, they're, I don't know if it's a little canary in the, whatever thing, but you have to look at some of these things. And overall, the Fed has done their job. They've slowed down the economy. I mean, really, like I've said before, everything boils down to how many dollars are chasing the goods. And right now there's been just an influx of money coming into the system. All of the stimulus checks, just, they keep writing checks, and it's just made up money. So basically that's causes inflation, and they have to fix it by raising rates on everybody. And it's a vicious cycle that goes back and forth. And I think we'd all love to see something just a little bit more even keel. But I do believe we're really close to the end of it. I'm hoping that politics doesn't play too much of a factor, dragging things out so they can look really good right before an election. I don't know. I'm not on that pay grade. I can only deal with what I'm dealt. And what I'm dealt is really looking at the jobs numbers. And did you really create a job if you have 2 part-time jobs? Well, on the surface, you get to have something come out on a news report that says we created 2 jobs. But in reality, if one person has to work both those jobs to make ends meet, you created 1 job. So that's changing the math by 50% right there. And not too all negative. We have a resilient economy. I'm just kind of biding my time, doing the best I can for people in the meantime. And there'll be an opportunity to refinance, but I still think it's a really, really good time to buy. And I haven't changed my mind on that at all.
And why do you say that? Because I agree with you, but it seems counterintuitive to the general public. So,
well,
what are your reasons?
All right. Well, I listened to myself last time, but I tried to explain this on the radio, and to be honest, I felt like I was down rabbit trails. So let me try to be just really concise. If you are in a low rate environment and you are bidding $30,000 over because there's such a frenzy for a house that, and just hoping you get it, it takes a long time to make up the difference in that $30,000 that you paid more by paying, well, let me contrast that with buying in a higher rate environment, which is what people are trying to wait out and get away from. So if you're paying a percentage point higher in a rate, in order to make up that $30,000, you're over 9 years paying that, just getting back to even on that $30,000. So
wow.
It makes more sense to get into a house now where you could even, not pay 30,000 over, but maybe even negotiate for $10,000 in closing costs and buy down your rate a little bit, or don't, maybe, and when it's all said and done, there will be an opportunity to refinance. And I always say I'd really prefer to get somebody in the right loan the first time, because we don't have a crystal ball. We don't know for sure what's going to happen, but I'm sure that rates will come down within over 9 years. And we're gonna
I agree. I'm sorry.
No. It's and everybody thinks that, because you can see it in the pricing. You can see that they're not offering any rebates on pricing. In the old days, you could go in and you can take a little bit of a higher rate and get some money back. And you're not seeing that these days. And you're definitely not seeing it on investment properties and second homes, where you're pretty much, paying a little bit in points no matter what.
To
And
be an investor versus a owner occupied.
yeah, but I guess what I'm saying is that they don't want people getting into a free loan knowing that they're going to refinance out of it. So that's why that's kind of a clue to the really smart men and women that are sitting in, some tower someplace that know that rates are going to come down. Otherwise, in a normal market, you can do what we call rebate pricing. And again, take a little bit of a higher rate. We're paying you a couple $1,000s to take the loan, knowing that you're not going to refinance out of it. But we know that you're going to refinance out of it right now. And that's why we're not offering any of
Well,
that.
that's interesting. So the lenders are being proactive, anticipating refinancing.
Yes. And
Okay. Well, that's okay. And that's a new thing, kind of, because that's not what you guys, well,
yeah,
just not you guys, but
it's been
lenders.
going on for a little while. It's been going on for a little while, but we've definitely noticed it ramp up in the last 6-8 months as far as that goes. I think we've all known that rates were going to drop longer than that, but they've just taken a little bit longer to do it. Again, these job numbers are just dumb as heck. But
So your advice is to go ahead and get a house now because you'll get a better price. You'll have more cooperative sellers. It'll be an
yes.
easier transaction.
Yeah, and if you have to pay a higher rate for 6 months, big deal. What's a couple extra $100? I mean, I think on the math that I did, it was a more expensive house. It was a 700 something $1,000 house, and it was $500 difference a month in payment. So, I mean, don't hear what I'm not saying. It is more expensive, but 6-8 months at $500 does not get you close to $30,000 that you paid more for a house if you're waiting for rates to go down. Because I think all of us can feel, well, I don't have a whole lot. Well, I guess I do have a whole lot of buyers, but you guys deal with them every day that are just saying, oh, I'm just waiting. I'm waiting for it to crash. I'm waiting for rates to go down. I'm waiting for something. And there's so many people waiting right now that they're going to be sadly, mistaken when all of a sudden it's a feeding frenzy again, and they're just fighting to get into a house.
Well, and part of what I'm experiencing in the market is very much like what you said. People are waiting, buyers are waiting, sellers are waiting, everybody's waiting. But what's interesting is the houses that are on the market are getting showings, and they're getting a decent amount of showings, but people are not writing offers. They're nervous. They don't 100% love the house. And I think that's an attitude that we need to address as an industry, that you're not supposed to love the house 100%, are you? I think, don't we shoot for like 80 to 90%, because nothing in life is 100% perfect. It's a lot like getting married.
Well, it's funny. I was just going to say that my wife is shooting for like somewhere between 25 and 28%.
Not to disappoint everybody on Pinterest, but
but yeah, I mean, I guess if you're Bill Gates or something, but then I've actually been on a boat by that guy's house. He's like hiding in a cave where he lives. So even if you have all the money and you find the perfect place, and might be somebody that doesn't want to get shot, so you're just hiding in the basement anyway. So I mean, yeah, there's never going to be the perfect place. I think as long as you're there, happy with your family, that's what's the important part about it. But it's such a integral piece of your overall wealth is owning a house. And to be in the wrong house for 10 years waiting for the right house, if you just average out how many years you're in the right house or the wrong house, you might as well go be in the right one if you can afford it, now. And again, there will be an opportunity to refinance, and we're not going to charge any banking fees for that when that time comes.
Well, and that's awesome. Yeah, that will make a big difference later on. But yeah, it's kind of interesting because we do have still a few more buyers than sellers. So the market is there. the showings are happening, but people are not pulling the trigger.
I think if it's the right house and in the right neighborhood, they do sell quick. Because I have had real estate agents that say, I have this one listing that I really like that is not selling, and I have this other one that just sold in 2 days. So it's
But
still,
that's very hit and miss now, isn't it?
yes, yeah. Let me just touch on one. I know we only have a second or two here, but just to get back to the Jerome Powell statements, he said, that he's trying to navigate by the stars on a cloudy day, basically. So, I mean, I think everybody's trying to do the best they can, and anyway, this thing will sort itself out. It always does.
It always does. And you and I are older people, so we've been through this many times, and it always does work out for sure. So we're gonna take a break shortly and come back and finish talking to Guy Giles, Mutual Mortgage, one of our sponsors. Thank you. And Guy, before we go, how about you do a shout out with your cell phone number real quick?
Yeah, it's 541-944-6987. And I promise I will not ever try to hard sell you. I'm just here to give you information and help.
Yeah, very educational based, which is also the basis for the show. So we're going to jump off and let the sponsors do their thing. We'll be right back. We're gratefully sponsored by John L. Scott, Ashland and Medford, Guy Giles Mutual Mortgage, and our local Rogue Valley Association of Realtors, also known as RVAR. We'll be right back with more of the Real Estate Show. Don't go away. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema. I'm a broker here in Southern Oregon with John L. Scott Real Estate, and we're getting a chance to interview Guy Giles of Mutual Mortgage today. A super special episode because we had yet another Federal Reserve Bank meeting this week, and it wasn't all, roses and sunshine, was it, Guy?
No, and that's what we're hoping for, because honestly, they'll finally shut down all these rate hikes once we get away from the roses and sunshine. So that's the perception, that everything's going really, really well, and they can't have that. They have to have a really low just overall interest rate. And their target is 2%, which, to be really honest with you, it's unattainable. Completely unattainable.
So that's unrealistic, you think?
Yes. Yeah.
And what did it come down to this week? What did they decide it came down to?
As far as the actual inflation,
because I heard that people were saying that they thought it was close or close enough, and that some of the markets were kind of surprised that they weren't pausing or reducing the overall rate.
well, it's going to take the jobs numbers to do it. It really is. I mean,
So they're waiting
a lot of
for
what we
more
look at,
unemployment. Is that what you're saying? They
what's that?
want more unemployment?
Well, basically, yeah. I mean, really what you have to have is just again, less dollars, out there in the environment. And what it comes down to, if you're buying cars and you're buying side by sides and boats and things like that, then there's just a whole lot of, if everybody's out looking for those things, then it costs more money for those. But as they tighten credit up, if your boat payment that was potentially going to be $250 is now $650, somebody might just say, you know what, my old boat's fine for now, and I'm not going to do it. So that really just boiled all the way down. That's the goal, is just to kind of just cool things off a little bit.
So they're trying to slow down spending, consumer spending. Is that what you're saying?
Yes. Yeah. And just kind of like take some money out of the markets. Every time you go down and you borrow money, then that's more money floating around, and it causes this inflation. And it's just really boils, again, just taking money out of the system. I know that if I drive by Waterworld, there was not two side-by-sides out there, and I just drive by it every day to and from work. Now there's every place that they could possibly stick one, they have one. Plus they've stuck them in their little parking lot across the street, and they have 3 aisles of them there. I don't know how many are in the back of the place. They're sticking them on trailers. So that shows me that people are not buying things like they were.
Mm-hmm.
Unfortunately, the Fed tends to look backwards. Shelter cost is a huge part of the CPE, and right now it's probably at about a 3.4, but the way that they're measuring it is 7 point, I think 6. And I apologize, I don't have that number in front of me. I didn't expect to go down this road, but what
So,
they're doing is averaging the last year. So you still have months before where, they're still counting those in. And I mean, I think averages are good in a lot of ways, but it doesn't show real time where we're at right at the moment.
and the general public feels the real time impact, especially in the housing market. And it seems like the housing market is really taking it on the chin with this economic correction that the feds are trying to do. And it's taking longer to correct the other parts of the, I don't know what you call it, the economic chain. But yeah, it just seems like they're really kind of picking on housing, waiting for that to come down.
Yeah, but I mean, if you if you really think about it, I mean, yes, picking on houses, and our house, our rates are up. Think about the person with credit card debt. I mean, that's what this directly affects, is somebody that has credit card debt. So, I mean, people have spent their stimulus checks and they're trying to keep up that lifestyle and either just pay their bills or keep up that lifestyle off of credit cards. And that's the other part that will kind of come to roost faster with higher rates.
But isn't that one of the danger signs? I mean, isn't that one of the things economists look for as a warning that consumer credit card debt has gone up?
Yeah, I think if you had economists running the Fed, then it would probably
Oh,
stand to reason that yes. So I mean, there are good feds and bad feds, in my opinion. And just like people, and you know, so some of them will come out with a voice of reason, some of them won't. And I guess it takes just kind of a consensus. Yeah. So the housing probably feels like it's getting, picked on as far as that goes. But if you really look at somebody with some credit card debt, that's a lot of punishment right now as far as the rates going up like they are. I think we hit $1 trillion in credit card debt for the first time
wow.
ever. And and I think it was something you were saying off air. Yeah, that's all a symptom also. So I would like to get back to a point where people have a little bit of savings again. I think savings is really low compared to where it was before also. And the Fed just really, I think it's time to take a pause and just let everything react for a little while, and don't come out every other week having a Fed from San Francisco or a Fed from someplace else just come out and scare everybody. Because I don't know how that helps. I think we're all just looking for some normalcy, and it's taken longer than I thought it would, for sure.
Mm-hmm.
Uh, I was calling for 5.5% by now, and I'll tell you I was wrong. I mean, so maybe I just didn't anticipate an election year coming up. 12 months from now, believe it or not, we'll have a presidential election next year at this time. Um, it's it's crazy. So anyway, so if people will either, I guess, pick conservative or pick Bidenomics or whatever it is, but as all we know for sure is there's always going to be change.
Right. And the credit card debt, you mentioned that that is a little bit of a warning bell. So the people in general seem to be experiencing the effects of a quote unquote recession, whether the powers that be want to call it a recession or not. It's hard with the fuel prices so high and the food prices so high. And then they're coming down with different kinds of building restrictions if you want a new hot water heater or you want a new air conditioner or something like that, the prices are just really, really crippling the general public. And then we try to encourage people to buy houses in this environment. And then we wonder why they're a little slow on the uptake. But it doesn't change the fact that, like what you said, it's still probably a really, really good time to buy because the prices are artificially suppressed, right?
Yeah. And I think like at the beginning of the year, they were actually going down just a little bit, but that is not the case at this point. And I still think, we're going to end up somewhere between, I mean, the math when I saw it last time showed 7.4%, but I don't think quite that high. I think that, and this is nationally, I think that we're probably going to end up somewhere in the neighborhood of 6.5%.
Oh, for interest rates?
Well, no appreciation for the year for
Oh,
house.
for appreciation.
And that's in a market where everybody's like, oh, I'm waiting for them to go down. Well, we're 3.4 million houses in the hole right now, as far as meaning we need about that many more houses. And that doesn't even count every time something burns down. But that's reality. And as much as we'd all love, for there to be an overabundance of houses and really low interest rates, there's just not the houses out there to support this going down. So if you can afford it, buy. I will say that, till the ends of the earth.
Well, and also it goes back to the basic supply and demand thing. And that's the part that we're all losing track of is supply and demand, like what you just said. We just don't have enough homes like we normally do. And this idea of waiting, I think, exasperates a person's own financial wealth building opportunity, because you're not jumping in at a time when it would really make sense because of supply and demand. It would make sense to jump in.
And it's just been, like I say, even beyond that, if you have $100,000 sitting in an account waiting to put it down on a house and you wait 12 months and inflation was at 7%, that $100,000 at the end of that year is only worth $93,000 now. You don't still have $100,000 sitting in that account. And say you went and invested it and you found some gal that was awesome at it. And in this environment, we know the stock market's down, but say she got you 8%.
Mm-hmm.
At the end of 5 years, you have $49,000, compounding the interest. But if you go invest that in a house, you have $500,000, at 20% down, you have $500,000 growing for you. So you've gained almost $200,000 in appreciation at that point. So what a good way to maybe help your kids out if you have some money laying around. Just waiting too long is, I don't know. It just doesn't mathematically make sense at all.
Well, and also you need a house. You either need a different house or you need a house in general, and that's the other thing. In Southern Oregon, traditionally, like you said, the appreciation rate is on a bad year 3 to 6%.
Yes, and I went conservative when I did kind of the math that I just went through, and and what you talk about as far as all the restrictions and everything being put on people, I think people are feeling that also. I did look up, or something crossed my desk this morning about the 10 highest zip codes or the hottest zip codes in the states. There was none of them that were even close to the West Coast. And I think that a lot of that has to do with regulation and a lot of the things that have been imposed on people. And I think it's done by good meaning people. Don't get me wrong. I think the people really want something better, but we really need leaders that will look a little bit towards the future and look at some of the ramifications of what's happening. And it's definitely not attracting people to the West Coast at this point, which is cool with me. But
that's so Southern Oregon. That's a so Southern Oregon thing to say. Because we do like our elbow room out here.
Oh, absolutely.
Sure. Yeah. But we're still on some of those lists of places to live that came out during COVID as one of the top, I don't know, 20 to 50 locations. It's a destination destination location now. We've got the big airport, international airport. We make fun of it because it's so small, but it actually is
I don't
legitimately an
understand.
international airport.
I don't understand the term international airport.
It has to do with the weight that the runway can hold, so that it can take the bigger planes. So it's not about the
Why
size or
international?
where.
I mean, just anyway, that's off topic, but
Well, but
international implies something to me in my brain. National, because since they only fly, should be anyway.
I know it
It's a
doesn't
big
make sense,
airport.
but
There's
it's
lots
why
of
a lot of
planes.
people will move here from the big cities, is because we have the amazing hospitals, we have all this land, and we've got this quote unquote international airport.
I live here, so trust me, I love it. And I mean, honestly, I'm at the point now in my life where I could be anywhere, and I am here, and I choose to be here. And I know that there are still tons of people that will be coming to this area. So no, even though it's not the top 10 list of where people are going right now, it's absolutely a destination place where people will want to come forever. So
Yeah, and because of that, again, supply and demand, we anticipate the appreciation here. So Guy Giles and I think people should buy houses right now. We got to take a quick break. We're going to be back with the real estate show. Don't touch. Well, hey, Southern Oregon, thanks for joining us on the real estate show. We're talking to Guy Giles today, Mutual Mortgage. Just a quick reminder that this episode will replay again tomorrow, Sunday at 6 p.m. on KCMX FM 99.5. So, Guy Giles, we've talked a lot about the Federal Reserve Bank. Let's talk a little bit about credit and credit scores.
it's definitely a factor. We got a little bit of a scare for a while. I think they got it kind of shut down now, where they wanted to give give people with lower credit scores better rates.
What happened with that?
Well, it for now it looks like it's off the table, thankfully. Now if we could just get rid of measure 110, because that's probably what started that thinking.
And remind people what measure 110 is.
Allowing drugs, basically,
in Oregon.
Yeah. So
personal use, everything.
I would urge everybody, even if you like drugs, don't like drugs, we've already seen what's happened from that with the deaths and with everything going on around us. And this thing hasn't been a good thing. And I think there is a kind of an effort to repeal that. And
there is a movement.
I'm hoping that happens, because we're not doing anybody any favors. Now they're just running around, hanging out on the streets doing it. But how does that relate to credit scores? Not at all. But that's just kind of how my brain functions. Okay. So maybe we can dive into that for a minute. It's funny because one of the biggest questions that I get is, I was just on, my paying my credit card statement, and it told me that my FICO score was 830. And then I pull their credit score and it's, 780 or something like that.
Wow, that's a big difference.
It's usually not that big, but first numbers that kind of came to my head. But believe it or not, there's like 56 different ways that they generate FICO scores. And credit cards are different than cars, different than houses. Everything is just, it's really weird. These are private companies, just kind of like the Fed. The Fed's a private organization running all of our monetary policy. Credit people, I have done a lot of research into this and found out in the old days, you would have a small town and Bob the farmer would come in and he'd, until his crop came in, he'd borrow stuff. He would basically get, whatever he needed to run his farm, and he'd either pay them back or he wouldn't. And that was good information for other people potentially loaning Bob something, to know whether or not he paid his bills. So there was a lot of private businesses that had a lot of intel on everybody as far as, do they pay their bills, do they not? And that's how this whole credit thing got started. And that's why it's private, because it's just, like I said, it started out like that. Somebody comes to town, they don't know him from anybody. It's like, should I loan him money? And somebody realized that they could actually make a little bit of money with that information. So that's kind of the inception of it. But now we've got to this point where they have a big just kind of, I guess over our lives. I can't think of the word right now, but they have a lot of power over us with these credit scores. Unfortunately, it's a game we have to play if you just want to get out of that market and not play credit with them. It could hurt your insurance. It could hurt a
Yeah.
lot of different things that you every day, just kind of have to deal with. So I think
Well,
the first
in some dating situations, it's an issue too. So it's not just your finances.
thank God my wife didn't ask me, because literally when we had our first daughter, Brittany, I didn't have the credit to buy a bed. I mean, just because I just wasn't, well, I was a guy, let's face it. And I tried to get a bed on credit, and they would not give me the money for that. So I've been on both sides of this thing. But if I think starting out, maybe if you get into trouble with credit, there's just some basic rules for negotiating it as far as what you should and should not do. One of the things is if you're on the phone with them, tell them, hey, I've got a witness right here with me. Whatever we talk about, I have a person sitting here. Don't necessarily admit that you have debt with them or deny that you have it. Just talk to them about options on how you can remedy.
Oh, wow. I didn't even know that was a
Situation.
thing.
Yeah, it's kind of weird. And I haven't really lived in this world, thankfully. I've either had no credit or, it's been all right. But these are mistakes that you can make. If you give them your bank accounts, now they have access to all of your bank accounts. If they say, well, we'll do this and we'll make these payments out of it, you just tell them, you don't disclose that you necessarily have any money. You just say, look, I have a relative that's paying this money. You obviously don't give them access to their account, but that's how you take care of this thing. You always pay with somebody else's money. Before settling any recent debt, you might try to dispute the total amount that you owe with them. A lot of times they'll write things down. They're already writing it off on taxes. They've probably bought that debt for pennies on the dollar. So definitely try to negotiate with these people. Again, not with your own
Oh,
money.
that's okay. So just give it a shot. Like ask them if you can, how do you word that? I'd like
Well,
to negotiate. Can we do better? How do you word
yeah, I
it?
don't have any money. My mom might be willing to help me give you something. I guess is how I would probably phrase it. And if it's too much, then she's not going to. So, and something is better than nothing when they've virtually paid nothing for the debt when
Uh-huh.
they try to, or
Well, I bet a
kind
lot
of
of people
bought it
don't
out.
know that might even like I wasn't quite sure that was negotiable. I thought you just had to pay it.
Yeah, and when I say dispute, a lot of the credit repair places will dispute accounts or have you dispute accounts. One thing, me as a lender, I cannot loan if you have disputed things on your credit report.
You mean unresolved, disputed?
Yeah, yes, if they're disputed. So just know, don't dispute a whole bunch of things and come in. I got bit when that first started to happen, because they started omitting things from people's credit reports. It's kind of like, I kind of like it as far as innocent until proven guilty. If you don't believe you owe something, and somebody sticks something on there, but sadly, usually you do owe it or owe something. And they
Mhm.
want that to at least get reconciled before we can make a determination. Because if we just pull a derogatory thing off of your credit's going to shoot way up. If you go dispute a whole bunch of things, your score is going to go way up. But
Mhm.
underwriters have realized that they need to check and just make sure that that it's that everything's okay, and that you don't really owe money.
How long do
So
you have to wait after you've resolved something? How long does it take for it to show up on your
usually a month
score?
or two, but if we're helping people with that, we have the ability to do rapid rescores,
Oh,
and
really?
we do not pass that fee on to the. Yeah, I mean, I'd like to say we don't do it out of the goodness of our heart. Legally, we can't do it anyway, pass that fee on. So if we do a rapid rescore for somebody, we eat the hundreds of dollars that it costs to do that. But I think, just as important as fixing bad credit, or them looking at it in 5 different ways, it's like, what do you do to maintain your credit once it's okay? And
So we're gonna have to break.
Oh.
And we're gonna have you back on the show again, Guy, because this credit repair stuff is super interesting. Can we give people your phone number real quick before we sign off?
Yes, 541-944-6987.
Guy Giles, Mutual Mortgage, always great, always funny, super informative. Thank you so much for being on the show.
Hey, thank you.
All right, folks, have a great weekend. We'll see you next time. Bye now. That dial.